From my point of view, I just don't think it's fair for XYZ firm to be treated this way.
I think XYZ firm is clearly at fault as they harm numerous stakeholders.
I think there's so much gray area in this case. Hello everyone! So for today's discussion, we're going to bring up the topic about one of the big issues that is actually currently happening in the accounting world. So one of the big accounting firms has done it again as they are getting another sanction for new case and it's related with one of the big construction firm. And so in this episode, we're going to find out and tweak more about the case and about the opinions and thoughts. That's why in today's episode, we have Raine here.
Hi.
And Elsy, and they're going to share their thoughts and opinion. And before we start, I will be the moderator, and my name is Ranggi. So I do have some questions for you guys. However, I will explain briefly first about the overview of the case that we're going to discuss. So about the overview of the case, it all happened as one of the construction company, which will revert as company A, has a bad financial management, and it leads to the company's liquidation on 2018, and it have to be liquidated with a total debt of 1.5 billion pounds sterling, while they only have cash of 29 million pounds sterling. And this sudden liquidation in 2018 raises the question of stakeholders, because in 2016, the financial report of company A looks in a very good condition. So that is where the accounting firm, which we will revert as XYZ firm. So XYZ firm here audits the company A, and it raises the questions from the stakeholders, like how can XYZ firm miss the red flags in company A statement and agree to publish a fictive statements. That's why this incident eventually leads to the XYZ firm getting sanctioned from the regulator, and they're getting fined and also have a license revoked. So, however, although XYZ firm has been sanctioned, there are still a few interesting gray areas from these issues because there are some rumors that the XYZ firm has known nothing about this financial condition. That's why we're here with Elsy and Raine to discuss on several aspects from this case, with the main topic of document forgery and incorrect audit report by XYZ firm. So the first question that I'm going to ask to you guys, what do you guys really think that caused company A's downfall and that caused them to have such a bad financial condition? So maybe we'll start from Raine. What do you think?
So in my opinion, I think there are four main factors that caused the company A's downfall. That consists of high debt levels, PFI contracts, and also poor project management, the accounting irregularities, and also the executive remuneration. So regarding the high debt levels, company A had taken on substantial levels of debt to finance its acquisition and growth strategy, and this debt burden increased the company's interest expenses, making it challenging to generate sufficient profits to cover these costs. And then regarding the second factor, the PFI contracts. So company A had a substantial portfolio of public-private partnership or PPP, and also the private finance initiative or PFI. So these contracts involve complex long-term commitments with fixed pricing structures, and some of these projects actually experience poor project management, leading to delays and also cost overruns, thus eroding profit margins and also further worsening the company's financial condition. And then the third factor, which is accounting irregularities. So there were allegations that company A used aggressive accounting methods to recognize revenue and also manipulate its financial statements, and these actions actually made the company's financial health appear stronger than it actually was, leading to a loss of investor confidence when the truth came to light. And the last factor is executive remuneration. So although having a bad financial condition, company A's two executive directors received over 2.5 million pounds sterling in remuneration in 2016, including bonuses totaling 385,000 pounds sterling. And company A's former CEO earned even 1.5 million pounds sterling in 2016 and continued to receive a salary of 660,000 until October 2018, despite issuing several profit warnings. And in 2016, the board also relaxed the clawback provisions for directors' bonus, which was deemed inappropriate.
That's such a big remuneration despite their financial condition. So what about you, Elsy? Do you have any other?
Okay, so I think since like we're still discussing on like the beginning of the topic, and we're just getting to understand what actually happened with Company A's downfall. I think in this part of our discussion, me and Raine will still be on like the same side, because all of us acknowledge that Company A actually had a very bad financial condition to begin with. And as Raine mentioned before, I will just give some additional reasons to why Company A is actually facing a bad financial condition. As Raine mentioned before, we all know that Company A is known as a private company that are paid by the government to do like public structure, like for example roads and also buildings, hospitals and everything. They are doing that through borrowing monies at far higher rates than obtained by the governments, but they charge people, us, the publics, for using it. That's how they do their business. And then it is also known that Company A actually has been doing very shady business since we can say 2016 or 2017. They are known to ban workers' union and to not to just doesn't support any labor union and everything. So there are so many sides, like bad sides, that is actually happening with Company A, and the government has actually we can say do nothing from 2016, and as I mentioned before, until this case resurfaced in 2022.
Yeah, so I believe the company has done a lot of violation towards law and regulation before this case even happening.
Yeah.
So does XYZ firm really know that Company A's have a bad financial condition? Or maybe actually there's a possibility that Company A actually covered their real condition from XYZ firm too?
Okay, so I think this is where we start to get different opinions from like me and Raine. So basically, just to refresh it all again, XYZ firm is the auditor of Company A, so they have the responsibility to give audit opinions on the financial condition of Company A. And last year, XYZ firm released an unqualified opinion for Company A, meaning that there are no material misstatement and the company is in all good condition. However, 7 months after it happened, the company went into bankruptcy, as we all know. And so, back to Anggi's question, does XYZ firm actually know that Company A already had a bad financial condition, or maybe there's a possibility that Company A actually covers the real condition to their auditors? So I would like to say that actually XYZ firm suspected that the management of Company A provided false documents for them to audit. So they provide a document that they consider more audit friendly, so that it would have a better result, so that it would look better for the third parties and like for the public, so that their company looks like it is in all good financial condition. And XYZ firm actually backed up their accusation since they know that in between the Company A, so they found one email from Company A's financial director sending referring to the document that will be given to the XYZ firm to be audited. They refer it to as the magical adjustment version. So they have like a special name between the internal of Company A to call the specific document that is going to be audited by XYZ firm. This is where the suspicion raises. So they have another version or another non-revised version of the financial document that they did not provide to the XYZ firm. So I think in this case, XYZ firm actually did not know about the bad financial condition of company A, since company A provided different and revised version of the financial documents.
That's actually a very interesting point, because Elsy here believes that the XYZ firm actually doesn't know about the financial condition. Like, how about you, Raine?
My opinion is actually quite different from what Elsy said. So actually, in my opinion, XYZ was actually aware of the bad financial condition of company A, considering the several indications, namely the high debt and also the accounting irregularities. So XYZ also created false meeting minutes and also retroactively edited the spreadsheets provided by company A before sharing them with the regulators. Thus, there might be a possibility of actually XYZ aware of the bad financial condition and altering the bad actual figures. And additionally, XYZ also agreed to pay the £14.4 million fine for the litigation with the regulator, which means actually they acknowledge their wrongdoings.
So Raine, before you mentioned that XYZ firm actually knows about the bad financial condition and they just cover it up. So what do you think actually are the motives of the XYZ firm until they wants to ignore the company A red flag financial statements?
I think there are several possible motives on why XYZ ignores company A's red flag financial statements. The first one I think would be the personal relationship and also the pressure from the management of the XYZ. So XYZ has been the external auditor of company A for 19 years. Thus they may have a mutual long-term financial interest between them. And also 2 of the last 3 financial directors of company A are actually XYZ alumni. So the auditors may feel a sense of loyalty or face even pressure from management within the firm to provide favorable results towards the company A's financial statements. And the second one, I think, would be fee dependence, because company A was a major client for XYZ, where it received around £29 million from providing auditing services to company A. This fee dependence might have created an incentive for XYZ to maintain a positive relationship with company A and avoid placing concerns that could jeopardize their engagement. And lastly, I think it's regarding the future business opportunities, because there was no tender for the external audit of company A. Thus, XYZ might see this as an opportunity for future business sources.
And do you have any other opinion on this question?
Okay, I think referring back to your question first, like the question was, do we think that there are other motives on why XYZ firm ignores company A's red flag financial statements? I would like to make it clear again that, in my opinion, XYZ firm cannot ignore the red flag from the beginning, because even from the beginning they didn't know that the company's financial statement is in a red flag condition. So they did not ignore it. They did not ignore it, but instead they did not know about it. So it's not about they are ignoring the red flags in the statement, but rather about they were given false documents. So there is nothing wrong with the documents. Thus, they are providing auditor's opinion as to what the documents are providing them. But then also, I would like to take notes on what Raine has said before about the personal relationship between XYZ firm and company A. And it is stated, and Raine mentioned that XYZ firm has been the external auditor for company A for 19 years. And actually, I don't think it's a problem here, because in the location where the case is conducted, there are no specific regulations about maximum number of years a company can use the same auditing firm, as long as there are constant negotiation regarding the audit terms, and also communications between the auditing firms and the company that is being audited. So I think for the motives, if we're considering the motives of personal relationship, it is not regulated in the law, so I don't think it will be a problem.
Okay, so actually we have a very interesting point of view here, because we have 2 different perspectives. However, I want to add another interesting insight related to this case, because actually XYZ firm self-report their wrongdoings to the regulator. So maybe I want to ask Elsy first, like, why do you think they want to report their self-doing? Is it like because they don't know about the bad financial condition?
Okay, so probably adding to Anggi's statements first, the self-report that is conducted by XYZ firm actually gives a lot of benefit for XYZ firm since it reduces their fine. So actually, at first their fine was like I think about 20 million, and then due to them conducting self-report, the regulators grant them a fine reduction. So now the fine is 14 million, and then I believe that the XYZ firm, as the auditor firm, do this because they are proving themselves to the regulators that they are admitting to what they're doing. Like even though they did not know about that they were given false statements and everything, they still provide an opinion that is not that doesn't reflect the real situation. Like it reflects the financial statements, but it does not reflect the condition, the true condition of company A. So they admit to their wrongdoings, and it is it proved that XYZ firm actually has a high level of integrity, and they are committing to their values, to their principles as and their responsibility as an auditor. So this is, I think this is a very good effort from XYZ firm to prove the regulators and the public that they have good intentions and also a high level of integrity.
I see. So it's more like they want to come clean about
Yes.
their situation. Okay. So how about you? Because you stated that actually the XYZ firm knows about their wrongdoing. So why would they want to self-report themselves?
So on the opposite from what Elsy has said, in my opinion, actually, their self-report is not because of their good values or intentions, but I think XYZ actually want to minimize their losses, because self-reporting is often viewed positively by regulators and the authorities, and it demonstrates a willingness to cooperate with the regulators when it comes to investigations and regulatory oversight, which can lead to a more favorable outcomes regarding the sanctions or penalties. Where in this case, XYZ actually successfully reduced the sanction amount from the 20 million to 14.4 million. And also, self-reporting can be seen as a proactive measure to protect the reputation of the auditing firm. So when XYZ becomes aware of the issues regarding company A that could undermine their the trust in their work and also their company, XYZ I think may choose to address those issues openly and transparently to demonstrate their commitment regarding the ethical conduct and also their accountability.
I see. So it's more like they want to themselves to not fall deeper into the problem. Okay. So to be able to execute this huge incident, it must have take a lot of process in it, and it must be a long progress for the XYZ firm or even the company. So what do you think are the justification made within the progress that they think that this is actually the right choice? Maybe we'll start with Elsy.
Okay, so I think back to like the everything we've discussed before, and I do think that first of all, to justify the firm's action in this case is that first they did not know, or they were provided false information, so they just audited solely based on what they know is the right condition, even though it is actually not the right condition. So yeah, first thing to justify their action is first they did not know about it. And then secondly, I would also like to take us back onto the theories of ethical theories, and one of the ethical theories mentioned is about the theological theories. So in the theological theories, it an action is determined as right or wrong or good or bad basically on the results or the consequences of those actions or decisions. So in this case, what the auditing firm is actually implementing is the self-egoism theological theories, so it is backed up by those theories. In this case, they only evaluate the rightness of their action from the perspective of their self only. So they're only making what they think is right. They're only auditing the report that they think is right, and they are providing those results as it is.
I see. So what do you think about Elsy's opinion? I believe you must have a different opinion.
So I think although XYZ may justify themselves based on the self-egoism theory, but clearly if I did the code of conduct of an accountant, namely the integrity, objectivity, professional competence and due care, and also the professional behavior. Starting from the integrity, XYZ clearly violated the integrity principle as they forged the meeting minutes and also edited the spreadsheets that company A provided. And then regarding the objectivity, there's a high possibility of XYZ being biased in doing the auditing process. As I mentioned earlier, that 2 of the last 3 financial directors of company A are actually XYZ alumni. And also regarding the professional competence and also due care, violation of this principle can be seen when a junior employee of the XYZ audit firm who had not qualified as an accountant was told to forge documents by his superiors. And then lastly, regarding the professional behavior, XYZ also violated this code of conduct principle as they forged documents and altered the information on company A, which is clearly prohibited by standards and regulations. And other than that, XYZ's self-reporting to the regulator indicated also that they acknowledged their wrongdoings throughout the audit process.
So that's actually a very interesting claim made by Raine, because he mentioned that the meeting minutes and the spreadsheet is being forged, which means that the XYZ firm actually take parts on making the documents false from the company A. So Elsy actually stated previously that they don't know about the condition of company A. So what do you think about this claim?
Okay, so first of all, just to let everyone know, the case is currently still ongoing, and I think both sides, company A and also XYZ firm, are still doing their best to provide evidences and everything in order for them to resolve this case. But I would like to point out on several allegations given by Raine before regarding the forged meeting minutes and also the edited spreadsheets and also objectivity due to personal relationships from the auditing firm and company A. I think those 3 still needs hard evidence that could back up so that those reasons could actually, so we could actually believe that those are the reasons XYZ firm actually already know about the bad financial condition and everything. And comparing to the claim that were given by XYZ firm that they did not know about the bad financial condition, it is already backed with hard evidence such as the email that were that were sent in the internal people of the company A, mentioning a specific name for those documents. So I think it is a pretty strong evidence to back up XYZ's firm arguments in this case.
So they're still throwing each other under the bus at this point. Okay. So because you mentioned that the trial is actually still going on, but actually XYZ firm has already faced consequences, which I actually mentioned before in the overview about their having a fine and also they're having the auditor's license revoked. So do you guys think that the consequences that XYZ firm currently face is actually equal to the problem that is caused? Maybe we'll start with Raine.
In my opinion, actually the consequences faced by XYZ are actually equal to the problems they have caused to the country's economy. First, regarding the failure of company A, so more than 3,000 jobs were lost at company A, and the collapse of company A also actually affected more than 75,000 people working in the supply chain, and it has resulted in a delay and escalating costs of around 450 public sector projects, including more than 800 million hospital projects and then hyperpass projects, and also company also signed 2 contracts worth around 1.3 billion regarding the HS to the north-south railing, which is actually just signed 21 days after they issued the profit warnings. And now actually the project was cancelled just a few days ago by the county's minister for the reasons of well-being costs and mismanagement. And for XYZ itself, XYZ actually has to pay a large sum of money due to this scandal, where, as I mentioned earlier, XYZ paid 14.4 million pounds sterling regarding to the settlement to the accounting regulator. And for the former XYZ employees who forged and manufactured the missing documents, they were fined by the regulator and also banned from the Institute of the Chartered Accountants. Specifically, the former XYZ partner was fined 250,000 and banned for 10 years, and then the 3 former XYZ executives were fined 45,000, 40,000, and also 35,000, and was banned for 8 and 7 years. Meanwhile, the junior employee who had not qualified as an accountant before and was told to forge documents was actually reprimanded.
I see. So the problems caused is very severe just because of false audit report. So what are your thoughts about this, Elvia?
Okay, I think if we're talking about whether the consequences that XYZ is facing right now equals to the problems that they actually caused, if we're talking about if it's equal, well, I do think in terms of fine and also other regulatory matters, it is already equal, because like they also consider the self-report doing by XYZ firm. The regulators have considered that and also already adjusted their fines and everything. And also, as Raine mentioned before, the people working at XYZ firm also already has received their consequences like fined, being reprimanded, not being able to work or for several years and everything. So I think according to the regulator, it is already equal. However, I think what is not equal in terms of consequences is how the media and the news is highlighting this news, because it really seems like the one at the biggest fault here is XYZ firm, because they're the one who, well, yes, they are the one who gave an audit commentary on the firm's financial position. However, it is not being very much told to the public that the company actually gave false documents, so they are actually auditing something that is not right. So I believe though in the law, through the eye of law, it is already equal for the consequences, but if we're talking about whether XYZ firm deserves all the questions and also all the negative images from the media, I do think it should not be 100% on them. Rather than that, people should also look at how company is actually also doing some very serious ethical misconducts.
So your claim is more like the media put too much spotlight on the XYZ firm rather the company, when the company is actually also at fault.
Yeah.
So actually in this case, there are a lot of gray areas. So we've seen 2 different perspectives. So I think that's why there's still many questionable areas in this topic. So what do you think are the actions or new policy that needs to be implemented after the situation in order to prevent same things happening again and to prevent the gray area that keeps showing up? So maybe we'll start with Raine.
So I think there are several actions or new policies that can be done to prevent these scandals or cases to happen again in the future. So the first one, I think, a stronger regulatory oversight. So we need to enhance the regulatory oversight of auditing firms and also their activities. So regulatory bodies should have the authority and also more resources to effectively monitor and enforce auditing standards towards auditing firms. The second one, I think, would be the mandatory audit firm rotation. So in this case, XYZ has been the auditor of Company A for the last 19 years. So mandatory audit firms should be considered to reduce the risk of long-term relationships, compromising auditors' independence and also objectivity. And lastly, I think is improved transparency. So I think we need to enhance transparency in financial reporting by requiring more detailed and understandable disclosures, especially regarding the financial health and also risk of companies with complex structures to prevent red flags in an entity's finances being missed.
So it's more like strengthening the regulation to prevent something happening again. So do you have any opinion on this?
Okay, I actually have a kind of a different perspective from Raine regarding the actions or new policies that should be implemented after this case. First, regarding the mandatory audit firm rotation, I don't think it could be a guarantee for a company not to do any misconducts or like have a personal relationship with an audit firm where there's a rotation, because like in this case, in the location where it happened, there are actually no regulations on maximum years a company could work with a firm. Thus, in this case, XYZ firm already had a very long relationship with company A. 19 years is not a short time. But then, proven from this case, even with 19 years of relationship, company A still gave false information to XYZ firm. So I don't think it is. It could be a guarantee. I don't think longer relationship means that you have a good relationship
or like trust each other.
Yeah. It doesn't guarantee that. So what I do think is important is that to have a regular discussion between the company and the firm to discuss regarding their accounting treatment, how their auditing process is going to be like. So I think that is what should be refreshed for like every period instead of only the firm. And I think probably adding on to that, I do think the role of the regulators is very important here. Back to the terms that says auditors also need someone to audit them, and I think in this case the regulators have the responsibility to do that.
So you think we should also make the better internal like control within the company?
True.
That
there should also be efforts from both
parties,
firm and the companies and also the regulators.
Okay, so we've had a very long discussion and we have heard about the perspective on both sides, and surprisingly they have a very different perspective on this case. So maybe first we're going to ask Elsy about her ending standpoint on this case. So what do you think overall about this case?
Okay, so for my ending standpoint, I would like to have 3 main points that I want to highlight. So the first one is the importance of knowing both sides of the story, because I think in this case, as I mentioned before, the media spotlight is mainly on XYZ's firm's wrongdoings and how they are incompetent as an auditors and everything. So I think we should put more weight on how the company A is actually doing some other ethical misconducts that are actually playing a very major role in this case. And then for the second one, we should also consider how XYZ firm committed to their value and to their principle as an auditor with a high level of integrity by doing self-report to the regulator. So this is where they actually prove that they have those kind of integrity needed as an auditor. And then for the last point is that how we can look forward from this case, actually from how this case is being open to the public and how the firms self-report themselves to the regulators. There is a new possibility that regulators may increase transparency and how they should treat cases. Like we see from the case of company A, it has been very long overdue. It has been more than 5 years that people actually already know that they're in a bad financial condition, they're doing a lot of ethical things and everything, but there are no actions from the regulators or from the government. So I think this case could also open up new possibilities for increasing transparency and everything. And all in all, I think that XYZ firm should not accept all of the consequences that they are receiving right now. There should also be consequences faced by company A, and there should be also efforts given by all parties in this case to create a better transparency, especially in auditing firms.
So the final conclusion is more like not to put all the blame on XYZ and also make companies responsible for this case also. And how about you, Raine? What are your ending conclusion on this?
So for me, there's also three things that I would like to highlight. So the first one, I think XYZ firm was negligent and also mysterious red flags in companies' A's accounts, misleading the stakeholders and resulting in massive losses for the failed outsourced creditors. And then the second one, XYZ firm allegedly created false meeting minutes and also edited the spreadsheets before sharing them with the regulators. And lastly, XYZ independence is also questionable in this case because they have audited company A for 19 years, received over 29 million in terms of service fees. And also there was no tender for external audit service of company A, and two of the last three financial directors of company A are actually XYZ alumni. So overall, I think although it has not been decided in the court, it is clear that XYZ in this case also have wrongdoings, despite company email also have wrongdoings. But I think XYZ also clearly need to be penalized and sanctioned for what they have done.
So you still believe that XYZ firm is very wrong at this point, and Elsy still believe that XYZ is not that wrong and still believe that company A will need to be responsible for it. So until the very end, Raine and Elsy still have a very contradictory point of view, and that's very interesting. So maybe I will conclude both sides. So the conclusion is actually the trial is still going on for this case. So there are still a few possibilities of outcome for the trial of this case. So for Elsy's side, she believed that XYZ firm actually doesn't know about the red flags of the financial statements, and they actually took the step and took the courage to self-report because they want to keep their integrity values, as they believe that they do not be at fault at this position. But Raine's here have a contradictive argument, saying that those self-report action actually not because of the integrity value, it's because they want to save themselves from falling into deeper problem. And Raine also believed that XYZ firm also conduct a document forgery, which means that they have taken a very large part on having a false audit report. So that's a very interesting point of view from both of you. Thank you so much for being such a good argumentator. So thank you so much, and that's it for today's discussion.
Thank you.
Thank you.